This is Jim Emter, AHn Co, Alexandria, Minnesota, with the closing grain and livestock comments for May 20th, 2019. Corn market up 5 to 6, soybeans up 10 to 10.5, Chicago wheat up 13 to 14, Minneapolis wheat up 15 3/4, Kansas City up 14 1/4. A great start to the week for the corn, beans, and wheat market, extending on gains. Obviously, weather continues to be the focal point as we work ahead. 6 to 10, 8 to 14 day, 5 day, any model you can find inside the next 14 days. Looks very wet for much of the nation once again, and that's a component of strength. Market will be focusing in on the crop conditions and planting ratings here, percent emergence, but with the cool, wet weather, we don't expect anything off the charts in regards to what has occurred or what has emerged. So that could be a bullish catalyst tomorrow once again. When you look to the feeder cattle market, down 37.5 to 82.5, live cattle down 40. Hog market down 62.5 up front. Back months up around 70, so kind of a mixed day for the cattle and hog markets. Really a lack of direction. Funds continue to exit cattle there a little bit, and that's understandable under the circumstances to how long they were. But when you look to the trend right now, we've got some reversal type action in cattle. We'll see if we can extend on that from last week. Here, Friday's trade was good. Today was a little more subdued, and we'll see what tomorrow can bring in that component. Hog market again, African swine fever continues to be the major focus point on supply availability around the world. The demand is down a bit too, though. China coming in and reporting that their overall demand tone has declined as well for pork, so that'll balance things a bit, but by no means is that going to allow for China not to come in the world market and buy additional hogs from other sources. So a lot of dynamics ahead, folks. Stay tuned, get rested while you can. Like I said, the weather conditions are not ideal. That's going to be a focal point, but we need to remember these markets have potential. That's real for the corn market, and it may even work into the beans and wheat. But there needs to be discipline in marketing yet. There's opportunities that can bring down the risk by conducting some marketing and allowing for upside by other measures, areas I can't talk about in this update. But you just got to keep your whole card close and understand that we are not rationing much for demand now. If we start getting to those mid to high $4 levels, we will start to take down demand numbers, and that in and of itself will at least build some carry out for the corn market. So these price counts right now stand for corn off the July at $3.98 and then at $4.21 off the July. For new crop corn, we're really looking at $4.09 and then upwards of $4.27. The fourth price count is up around $4.85, and I cannot rule that one out in new crop corn, but that's where you want to at least zone in on for now is $4.09 to $4.27, $4.28 off the new crop, with an outside chance maybe $4.85 is in the cards, depending on how big a story we get here. The bean market, really this $8.88 upwards of $9.10 area off the July. That's a lofty expectation now, 60 cents. But if this bean market starts getting into the weather story, those would be price counts you're beginning to look at there as well. This has been Jim Emter, AHn Co, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.